with the amount of debt that the Canadian government is taking, who's going to pay back that debt? Is it us? Is it banks? What's going to happen with the inflation? And how is it going to impact your life in terms of your financial well-being and your real estate market? Let's find out. What is up, YouTube? What is up, Canada? So thanks for joining in. This is my show. Welcome to the show. As you know, that the purpose of this channel is to educate my audience about the real estate market in Canada, with particular focus in GTA and Toronto area, as well as some of the macroeconomic factors that has an impact on real estate market as well. So today I'm going to cover three things. Number one is the recent, news about the inflation. We had an interview from Stephen Poloz, the ex-governor of Bank of Canada, as well as some recent conversation from Tiff Macklin, from Bank of Canada with some of the university students, as well as some rental market figures from TREP, and what we see across the border as well in US. So let's dive into it. So Stephen Poloz, he's the ex-governor of Bank of Canada. In the recent interview, he's expressed his views about the inflation and how he is not worried about the inflation right now, because everybody is acknowledging that the inflation is rising, right? We're seeing the prices are going up, but these ex-bankers, and they're saying that this is transitory, don't worry about it, this will get resolved, once the lockdown is over, because this inflation is because of lack of supply and extraordinary demand, right? Because when the demand is too high and we don't have enough supply with regards to lumber, steel, automobiles, people are buying these products and ultimately driving the pricing up. With these manufacturing products, maybe it makes sense. But what about the other products like gasoline, right? Nobody's driving too much these days. Why the gas prices are going up? What's happening with the resale properties, where these are not pre-construction properties, people are just exchanging their houses? Why those old houses are going, they are getting sold $200,000-$300,000 over asking? To me, that's a real inflation. And whether this is lockdown or not lockdown, it's not going to make any difference with regards to these highly inflated real estate prices. And last week, Tiff Macklin, he spoke to some of the university students at Alberta, and in that interview, he kind of acknowledged that one of the impacts of running these quantitative easing program, which is also known as printing money and increasing the liquidity into the market, is inflating asset prices. Whether this is financial assets like bonds and real estate, as well as stock market, because when you have so much liquidity, ultimately it's going to increase the flat asset prices. So he acknowledged that. And I think this is the first or second time that the chief of central bank coming out and then acknowledging that yes, this is the reason why we see this frothiness or exuberant market in the real estate, and we are observing it very carefully, because we don't want to make it happen like what happened in 2008 or in 2000. But in front of our eyes, we are seeing that this is happening across the board. And I've been telling in my videos that this is one of the fundamental reasons why we're seeing the craziness. And this craziness, we saw cool down a little bit in the month of April when we compared the data from March. And it's primarily because I think it's kind of hit the plateau where people think, oh, we cannot, overspend that much. And it also contributed because of some of the news that came out with regards to stress test level, as well as there were some rumors about interest rate is going to go up earlier than 2023. So those, I think, reasons kind of cooled down the market a little bit. But I think as long as we keep, have the liquidity in the market, people have, more buying power and lending power, they will keep buying those assets, because not a lot of people are buying as first-time home buyers. These are investors or existing homeowners where they're taking the deposit from their existing house as a home equity loan and putting as a deposit to acquire another asset. So keep in mind that the inflation is really here and it is going to go up unless the Canadian government or banks they intervene and started raising interest rate up. But the problem is they cannot simply raise the interest rate because it is going to damage the economy, because the economic figures are still not healthy. We saw 8% unemployment rate last month. We saw 200,000 job losses recorded in the month of April. So the economic situation is not good, and that's the reason the interest rate cannot go up suddenly until we see some sort of a recovery with regards to GDP growth, new jobs created, and the economy moves in the right direction. So think about that. Inflation fears are there. People are worried about their buying power. It is going to be impacted by the inflation, not just real estate, but any other commodity, whether real estate or non-commodity. The other thing I want to share with you is they use CPI, Consumer Price Index, to assess the inflation. Now, guess what? The CPI, from a housing perspective, they only consider the monthly mortgage payment or rental payment. The monthly mortgage payment is not rising because of almost zero interest rate. So the CPI is not considering the highly inflated real estate price. So it's not even telling us whether the inflation is really impacted because of the real estate or not. So that's a fundamental flaw in terms of following CPI ratings with regards to inflation, where we see the house prices has gone up 30% up year over year. And this is not just Canada. We look at across the border in US, the house prices have gone up 16% up. So this is happening at a global scale, guys. So these governments and central banks, they are pumping money into the system because they don't have any choice, because the government has to take debt to do some overspending in order to protect the economy and drive the stimulation. And as a result of that, it's driving asset prices across the board, like in Europe, in US, in Japan, in Canada. But Canada has been outlier in terms of the number of statistics per population. The other thing I want to touch upon is the rental market update. So we saw recent data from TREB, and according to that, we saw the amount of rental transactions, the lease agreement that are signed compared to in Q1 2021 compared to Q1 2020 is almost double. So we saw a huge demand in terms of rental leasing, right? But the average rents are still down compared to year over year. But with this huge demand coming in, we predict that it is going to surpass the amount of inventory and ultimately push the rent upward direction, right? So especially when we have the lockdown is over and we open the borders and let immigrants come in, because there's a lot of immigrants, they have their document process, but they're not given a green signal to come in. As soon as that happens, guess what? The rental prices will go up. So that's it for today. Give me your thoughts, your comments down below. Let me know what you want me to cover in the next video. I'll be happy to cover that. See you in the next video.